Assistant Professor, Department of Commerce CA and PG Department of Commerce, Nirmala College for Women, Coimbatore. I am handling Financial Accounting 2. In this video, we are going to learn what is depreciation, its objectives and causes.
Depreciation isn't a nice word. It sounds like the opposite of appreciate, which is weird because you will appreciate all the tax saving it will give you. Now let us see the meaning of depreciation. Depreciation is derived from a Latin word depretium, which means decline or reduction in the price or value. Therefore, depreciation refers to fall or decrease or reduction or decline in the value of fixed assets. Depreciation is the process of deducting the total cost of something expensive you bought for your business. But instead of doing it all in one tax year, you will write off its over time. When you depreciate assets, you can plan how much money is written off each year, giving you more control over your finance. The number of years over which you depreciate something is determined by its useful life. Next, we'll see the definition of depreciation. According to Accounting Standard 6, depreciation is the measure of wearing out, consumption or other loss of value of depreciable assets arising from use, affliction of time or obsolescence through technology and market changes. R.N. Carter defines depreciation as depreciation is a gradual or permanent decrease in value of assets from any cause. First, we'll see what is an asset. An asset is anything with the money value. It is also referred as property. It can be either tangible or intangible. A tangible asset can be touched. Think office building, delivery truck or computer. An intangible asset can be touched but it can still be bought or sold. Examples it includes patent, copyrights or other intellectual property. What kind of an asset can you depreciate? You can depreciate depreciable assets. So what is depreciable asset? In order to be a depreciable asset, it needs to meet the following criteria. Assets expected to be used for more than one accounting depreciable period. It should have a limited useful life. It should be used in production or supply of goods and services. And it should not be for resale in the ordinary course of business. You should know what is fixed assets in order to provide depreciation. Fixed assets are not fixed because of its geographical fixity. They are fixed in the sense that they are not completely consumed during production activity in a single accounting period. Fixed assets have a long life. It loses its value due to usage. Its value goes on reducing due to its lifespan. Depreciation is concerned with fixed assets. Depreciation during useful life of the asset. Here, the useful life refers to the period in which the assets help in generating revenue. Few examples of fixed assets are building, machinery, furniture, computers, vehicles, etc. Let us see the depreciation with an example. Miss Pooja purchases a car on January 1st, 2018 for Rs 8 lakhs. The value of the car on December 31st, 2018 say Rs 7,20,000. This is because of depreciation. Even if the car is not put to use, the value of car goes on decreasing. You may have a question. Land is also a fixed asset, whereas the value of land goes on appreciating. Why is depreciation not charged on land? The reason why depreciation is not charged on land is that the useful life of land cannot be found. A necessity for an asset to be depreciated is that it needs to have an estimated useful life, which in case of land cannot be determined. We can't decide what the estimated life of land we live or work on it. Example, to explain it more clearly, let us say a company which is still operational today acquired a piece of land in 1930. The company built its headquarters on the land in 1930. The building has been rebuilt and renovated many times since 1930. But the piece of land is still there and no one can say for how many more years it is going to exist, possibly infinite. So just because there is no useful life of land, there was no depreciation charged on that. In fact, with time, the value of land must have appreciated. Next, we'll see the objectives of providing depreciation. Depreciation predicts the true and fair picture of business. Because of depreciation, the profit is not overstated. It shows gradual reduction in value of assets. It helps to know the current value of fixed assets. It helps to comply with legal requirements and taxes as per the applicability accounting standards on the entity. The entity needs to follow the provisions mentioned in the standards. We'll see causes of depreciation. Depreciation is a gradual or permanent decrease in the value of fixed assets from any cause. The cause may be due to wear and tear, that is usage. It is one of the primary reasons for depreciation of assets. Most of the assets are worn off or get deteriorated due to the continuous usage of the asset, such as plant and machinery used for production of goods, buildings, vehicles, etc. As in the case of machinery used for production, the continuous usage and running of machinery, the working or production capacity of the machinery diminishes over the period of time, and the value of machinery also decreases in the market. So far, the fair presentation of financial position of the entity, it is necessary to reduce the proportionate value of the machinery in the books. Next, we'll see exhaustion, that is depletion of natural resources. In case of wasting assets like coal mine, well of oils, etc. are amortized and used as per the extraction of natural resources done from the during the period. In case of such types of wasting assets, there are limited resources that entity can extract from such assets for the use of the organization. As per the estimated total extraction that will be done from the wasting assets and amount already extracted during the respective period will be considered for the depreciation of the asset during the period. The third one, afflux of time, or it is otherwise called as passage of time. The plant and machinery used in the manufacturing of products in a manufacturing company needs regular maintenance over some time for full-time productivity to be received from the usage of such machinery. Even after a certain period, some essential parts of the machinery are to be replaced with the brand new parts. For such, the depreciation needs to be charged so that the parts that are to be replaced in the future are approximately accounted for and reported of during the period of its life. The next cause is obsolescence. that is outdated. The value of fixed assets used by the enterprise gradually decreases in the market in case the new upgraded version of the asset with the better technological advancement is present in the market, providing more benefits to the customer in comparison to the old obsolete version of the asset. In such case, the requirement of the old asset gradually decreases. Hence, it is necessary to show the value of the asset at a fair amount or reasonable amount. Example, the button phones are replaced by the smartphones. To sum up, depreciation is a non-cash expense. It is a charge against profit. It is a source of fund for replacing the asset. It is calculated using the cost of the fixed asset, and here the market value is ignored.
I hope you have understood the concept of depreciation. Thank you for watching this video.